Welcome to Learning Plan 9. This unit will be looking at using Excel as a tool for analyzing financial statements using ratios in the business environment. Starting out, we have the comparative income statement, statement of retained earnings, and competitive balance sheet for global technologies. We're going to translate this data into common ratios that are monitored by management, maybe the board of directors, investors, or shareholders. If you end up working for a progressive or competitive or publicly traded company someday, you will likely calculate these same ratios below on a regular basis. So to begin, let's start with the liquidity ratios. And the first one up is the acid test. The acid test, if you remember from your prior accounting classes, is an indicator on whether a firm has enough short-term assets to cover its immediate liabilities without having to sell inventory. The formula itself is cash plus accounts receivable plus short-term investments, all of that in your numerator divided by current liabilities. So let's go ahead and build the formula here. Starting out with cash, we're going to go up to cell B40, okay, and we're working in the year 2012, okay. We want to add in our accounts receivable, which is B41, and in this case we don't have any short-term investments, so I'm going to put my parentheses in here so that my formula knows that now that's the numerator. So now I'm going to divide by our current liabilities, okay, which in this case is going to be our accounts payable, or B48. So we come up with 0.82 for our acid test, or our quick ratio. The next ratio here under liquidity ratios is our current ratio. And if you remember this from your classes, your current ratio would be your current assets divided by your current liabilities. So to start off this formula, I'm going to go up to my balance sheet here and look for my current assets. So it looks like I've got 3 of them up here. I'm going to go ahead and just do a sum. And I'm going to go ahead and highlight my 3 cells: cash, accounts receivable, and merchandise inventory. Close that out. Now I want to divide this by my current liabilities, which if I look below, I really only just have accounts payable as my current liability. Go ahead and hit enter. That number isn't looking right to me, so to check this formula, I'm going to go ahead and double click. Oh, and it looks like I missed my prepaid expenses. So now I can leave the formula as is and just kind of click and drag my box down. And now you can see that my formula should be 40 through 43. And it looks like it did update my formula. I'm going to go ahead and hit enter. And there's my right number for the current ratio. Next up, we've got the activity ratios. So some ratios that would be considered an activity ratio would be our accounts receivable turnover. And that is a short-term liquidity measure used to quantify the rate in which a company collects its accounts receivable. So the formula we're looking for here would be our total sales divided by our average accounts receivable. Okay? So here we're going to use our first average in our denominator, but let's go ahead and start here with our numerator, total sales. That's available for us up top here. We can get that from B12. And now we want our average accounts receivable. Okay, so we're going to go down to cell 41, to row 41. And when we do an average, we take the current year and the prior year, add them together, and divide by 2. So we're going to go ahead and put our parentheses in here to keep this all together. So we'll take cell B41, 2012, plus C41 for 2011. And I'm going to actually need two sets of parentheses because I want to add these together. Then I want to divide by 2 to get my average. So now we've got it all nestled into one set of parentheses here for our denominator. We've got another set of parentheses to do the first part of our equation. So if we hit enter, we should get 13.24. Next up is our inventory turnover. The inventory turnover ratio is the measure of how much inventory is sold over a period of time. So here we start with cost of goods sold, and we divide that by our average inventory. So another average, but let's go up and grab our cost of goods sold. We're going to find that up top here in our income statement. So B13, okay, this is what I'm going to be my numerator. I'm going to divide that by my denominator, which is the average inventory. So I'm going to see right here in my comparative balance sheet, it's where I've got my merchandise inventory. So knowing what I just did, we're going to need two parentheses. So I'm going to just put 2 in there right away. And again, we're looking at our merchandise inventory. So I'll go ahead and select B42 plus C42 to add 2012 to 2011, close my parenthesis. Now I'm going to divide by 2 so I can get my average. I'm going to hit enter at 3.86. Next up is our profitability ratios, starting with the gross profit ratio. And the gross profit is basically the ratio of your gross profit to net sales expressed as a percentage. So let's get started with this formula and go ahead and grab our gross profit. We're going to find that up in our income statement. So B14 divided by our total revenue, which we had also in our income statement, B12. And we got 19.8% for our gross profit ratio. Moving on, we've got net income to sales. And that one, quite simply, is net income divided by sales. So we'll go ahead and go back up to our income statement. B22 is our net income divided by our net sales. So back up to B12, 8.28%. Moving right along to our rate earned on total assets. This one is going to be our net income plus interest expense divided by our average assets. Okay, so we'll go ahead and grab our net income. Back up to B22 plus our interest expense, right here, other expense interest, B19. Now this is what we want in our numerator, and since we've got 2 cells here, we're going to have to go ahead and put these in parentheses so they stick together and calculate first before we go ahead and divide by our average assets. Okay, so now we're looking for our average assets. Move down here to our comparative balance sheet. So we've done average assets before, or just average of our balance sheet account. So we'll go ahead and take B45 plus C45. close the parentheses. We want to divide that by 2, so we'll start another set of parentheses. Divided by 2. And that should have it, 11.96%. Closing out the profitability ratios section, let's go to rate earned on common stock equity. Here we're going to simply take our net income divided by the average of the equity. Okay, so let's go up and grab our net income. Divided by, and we want the average of our equity. So here's our total stockholders' equity. Go ahead and take this cell. Let's start our parentheses out. Go put both of them in right away. So we've got B53 plus C53. Close one set of parentheses, divided by 2. 13.7%. Finishing up this exercise, let's take a look at our coverage ratios. First one being debt to total assets. Here we'll start by taking our debt, which is our total liabilities. You can see it's our accounts payable plus our bonds payable. So we'll just grab our total liabilities here, divided by our total assets. So we've got that right up here on cell B45. Pretty simple formula. Okay, 0.24. And the very last one is times interest earned. Times interest earned, what that is that's going to tell a banker how many times over you'll be able to pay your debt to them based off of your operating income. So then the formula is times interest earned equals your operating income divided by the interest that we are paying. So here we're going to go back up to our income statement. Total operating income, it looks like, is B18. Okay, we're going to divide that by the interest that we are paying, which just happens to be the cell right underneath it, other expenses interest. All right, so 13.65. Sounds like a pretty good times interest earned ratio. So hopefully this is a spreadsheet that you kind of keep for yourself for the future, especially if you do plan on working for maybe a publicly traded company or a very competitive type company. Most management will be tracking these ratios, and investors and shareholders are very interested in these ratios. So if you keep the spreadsheet, you could, for wherever you work, drop in these numbers and have it work for you, and then you'd know the different benchmark ratios that your company, how it's performing. And when I was out in industry, we had something very similar to this, and then we'd also drop in like our competitors. So we'd have how we were performing, and then we would have how our closest competitors or industry average were performing. And it's just a great tool to compare your performance to others. Well, that concludes Learning Plan 9. Thank you for joining me today.